Hello everyone, this is Professor Kent. Today's recording is for Chapter 1 Financial Accounting. We're going to take up the homework today. The first homework question is AP 1.5a. This question you can find it at the back of the chapter, but what I did is I got the question here. So when you're doing a financial statement, this is statement of financial position. So what the question is asking you require what the question is requiring you to do is classify the following items according to where they appear in the financial statement. Which financial statement do they appear according to these items? So when we think of a first one, which is wages payable, when you think of a wages payable is a liability. If it's a liability account, then we needed to know, is this a current liability or a long-term liability? Anything that needs to be paid within 1 year will be a current liability. So wages payable is a liability, it is a current liability. So CL stands for current liability. Then we go to the next one, which is a prepaid rent. Prepaid rent is the rent that you paid in advance. If you paid something in advance, it is an asset. If it's an asset, we needed to know what type of asset is this, as a current or a non-current. So it is a current or a non-current. When you think of a current asset, same as a liability, if anything is going to be used within 1 year, then it will be a current. In this case, since we paid it in advance and it is a prepaid rent, it will be an asset and it will be your current assets. Going to the next one, dividend, and it's a payable. Dividend payable will be a liability. What type of a liability is it? It is my current liability. So it will be my current liability. Going further, inventories is an asset that we owned. So you buy the inventory to sell it. So inventory will be an asset. We're going to sell it within a year. It will be my current asset. Going further, when you have it, when they say increase, net increase in cash, which statement does give you that increase or a decrease in cash? When we think of that, statement of cash flow gives us statement of cash flow gives us that. So when I think of a statement of cash flow, that gives you increase or decrease. When you think of an increase, is your cash going up, is your cash going down? What statement does it give it to you? Statement of cash flow. Statement of cash flow, that's what the short form is. It's an item that goes on statement of cash flow, and there's three activities that goes on the cash flow statement. First, it doesn't have to be in an order: financing, investing and operating. Those are the three activities that goes on your statement of cash flow. When we think of a statement of income, what goes on statement of income? Your revenue account and your expense account. So revenue minus expenses equal to your net income or net loss. So when do we have a net income? If your revenues are higher, then you have a net income. If your expenses are higher, then you will have a net loss. Now going further, cost of goods that sold means the cost of goods that you bought to be sold. Where does that go? It goes on my statement of income. So it's an expense. So it goes on my statement of income. And when we think of that, cost of goods sold, cost of goods sold is an expense. We are buying the goods that cost us. If it cost us, it will be an expense to the company. When we think of a next one, dividend, and it's a declared. Dividend declared is this goes on statement of changes in equity. Statement of changes in equity. So that's where it goes. So dividend declares is the board of director decide how much dividend to declare. It is a negative on that when we think of statement of uh, changes in the equity impact. Pattern will be an asset, and it will be a long-term asset. So pattern will be non-current asset. So it will be a non-current asset. Acquisition, when you think of an acquisition, you're buying. So you're buying or you're selling. So that's what it means. Acquisition is when you are getting something. So buying or getting something. That will be my acquisition. Acquisition of a bank loan within a 5-year term. So when what we did is we got a bank loan. If you got a bank loan, it will go on two things. First, if it's a bank loan, when you think of a bank loan and it's a for long term, bank loan is a liability. If it's a liability, is this for current or a non-current? It will be a non-current liability. And then it also goes on my statement of cash flows. It also goes on your statement of cash flow. And if it's a statement of cash flow, is somebody's giving us money, it will be your financing activity. If you wanted to know, if you wanted to go there further, we have a deferred revenue. Deferred revenue is also known as earned revenue, means that someone else paid you in advance. So it is a liability, and it's a short-term liability. If it's a short-term liability, it will be my current liability. Common share will go to your statement of changes. It will go on your statement of capital, share capital. So it will go on your statement of financial position, and it will be my share capital. Under share capital, we have two type of you could have two type of shares. You could have a common shares, and you could also have a preferred shares. Preferred is for preferred shareholders, and common is for you, me, we can buy it. Preferred shareholders works for the company. Going to the next question, it's a similar but not same. Now we needed to know is indicate whether each of the filing items will be reported on statement of financial position. Statement of financial position, also known as a balance sheet. Then we think of a statement of income, SI, and or it does it go on both. If it's both, it will be B, or nowhere, that will be your N. So when we think of a statement of financial position, any account that is an asset account, liability account, or a share capital account, or a retained earning, they RE stand for retained earning, they all go on the statement of financial position. When I think of a statement of income have your revenue account and your expenses account. When we think of a revenue account, we also have other revenues. When you think of other revenue or other incomes, we think of interest income, we think of a dividend income, we think of any gain of a gain on an asset will go there. When you think of an expense account, you're thinking of all the expenses account. If you sell an asset, you have a loss, that will also go under statement of income. And then if they don't go, if they could go on both, or they go neither statement. If they don't go to the neither, it might appear on statement of a cash flow. That's what the question is asking. So when we think of a temporary investment is asset account. If it's an asset account, it goes on your statement of financial position. So SFP, that's what it is. Repurchase, what are you doing? Repurchasing your shares issued 10 years ago. it goes on neither of the statements. So neither. Goodwill will be statement of financial position. Rental revenue will be SI. Goods that are held for resale. So in other words, goods that are held for resale, it will be part of your inventory. So that will be your inventory. If inventory, it is an asset. If it's an asset, it still sits on your statement of financial position. Retained earning, statement of financial position. I put it in here too. If you're having a hard time, keep doing it more often, more questions to get the hang of it. RE stand for retained earnings. Interest expense goes on my statement of income. In this case, they told us there's an increase or you could have a decrease. And what account is that? It's an accounts receivable account. In this case, it will go on a neither. So if it goes on neither, this is just an increase or decrease in accounts receivable, and that will go on my statement of cash flow. Going further, depreciation expense, statement of income, it will go on statement of income. We have a gain on a equipment that we sold, and that will be your SI, statement of income. It's treated as a other income, where expense will be treated as a loss. Going further, this is a question to calculate the missing statement. When you do that, there is a missing numbers, so we needed to, you don't have to go in an order, you just do it. You work your part A first, then part B, then C, and then D. When we think of a total assets, what are your total assets? Your total assets are your current assets and a non-current assets. And then your liability will be, you can add another one. Your total liability will be when you add the both numbers. So what are the both numbers? If you add current liability plus the non-current liability will equal to your total liability. If you add those two, that will give you total assets. And then you have total liabilities and shareholders equity. This will take you to your PowerPoints. When we think of it, your total assets, when we think of it, equal to your total liabilities plus your shareholders equity. So if you know one, you could know the other. So shareholders equity, so your total assets are equal to your total liability plus your shareholders equity. So in this case, they told us what your shareholders total liabilities and your total equity is. In this case, that is 1,350,000, 1,350,000. So we say it's equal. They both sides are equal. My total asset will be equal. So then they both are equal. We're trying to do A. If they both are equal, would I be able to find out my 1, 4, and 6? Of course we could do it. I'm going to do my total assets. My total assets, your number 4 is 1,350,000. If that's my 1,350,000, from there, which it adds up, if I add both numbers, it will give me the total asset. In other words, now I needed to take my 1.3 million, that is my total assets. I'm doing a short form, that is total form, that is my current assets and non-current assets. So my non-current assets are 780,000. My total assets is 1.3 million. All I'm going to do is I'm going to take 1.3 million 500,000 minus your 780,000. It will give me 570,000, and that will be my current assets. So that will give me 570,000. Going further, they say that now my my total liabilities, but I also know my total liabilities. I'm just going to put it in here. My total liabilities plus your shareholders equity, shareholders equity will give me, if I add both numbers, it is 1.35000. But in the question they told us your shareholders equity is 638,000. What will be your total liability? I will take 1,350,000 minus the 638,000. It will give me my total liability. If that's my liability, it will give us um, my total liability. Sorry, I'm trying to look for my calculator. I'm just going to use my phone for my calculator. You're not allowed to use a phone for the test purpose. However, you can use the phone when you're working out these questions. So I will take my 1.3 million and 50,000 minus 638,000 will give me 712,000. So if that is my 712,000 and I take it, my total liabilities in part A is 712,000. It made out of current liabilities and non-current liabilities. They told us my current liability is 375,000, and then if that is 375, I take away the 375 from my 712. It will give me 337. So the answer to 6 is 337,000. So that's what the answer was. So I am going to erase everything that I have because I have too much on my screen, and you could go back and redo this. So let's go to part B. So I am going to do part B. Do what you know and then figure out the rest. So first one is, we know this is your assets, which is your total asset equal to your total liabilities plus my total liability and shareholders equity. When you do that, we're doing question B, part B, and we're trying to answer 2, 8, and 10. So those are the numbers that we're trying to figure out. They told us in the question that is your total assets are 1335. If that is total assets, these two numbers are equal, so this will also be 133500. When you are here, you can have this as a current and you could have a non-current assets. So they told us the current portion is 600,000, and then the non-current portion will be your 1335 minus your 600, and it will give you 735,000. So that's it will give you that, and that you already answered 73500. Now we're going to go to further. They told us what my total is. From there they also told us my current liabilities and my non-current liabilities. My current liabilities is 345. My long liability is non-current liability is 330. If I add both numbers, and what is that going to give me? It's going to give me the total liabilities. And what are your total liabilities? If I were to think about it, if I add both numbers together, and that will be your sorry, I'm just going to put it in here, 645. So when in the question, what we are doing is we are given your total liability. My total liability is 645,000, and I'm looking for my X, and that will be this, that will be the difference between the both, and that will be your number 8, and that number will be 660,000. So 660,000, so that will be 660,000. What is your total liabilities and equity, which is going to be 1335000. So that will be that. So it is this number, so that's what we already had. So let's see if we can do number C. We are going to do number C. They told us nothing, but I know that your total asset made out of two, current and non-current, that is your 180,000. This is your 390. If I add both numbers, that give me 570,000, and these two numbers will also be 570,000. So this is your 570,000. They told us your equity is 330,000, and my liability has both my current, that is 135,000. My non-current isn't given to us, but I know that if the total number is 570 and I take away the 330 from it, what I would get for my non-current liability will be 105. The other way to do is I take 570 minus the 330. It will give me 240, and that will be your total liability. And if this is a total liability, that has current, which is 135,000. 105 will be your non-current. If I add these two numbers, they should be equal to your 240,000. So let's see if I can do number D. My number D will be, they told us my total assets are 1650. If that's the case, my both number will be 1650000. Now I also know my current is 390,000. My long-term liability is 225,000. Now can I figure out my X? Yes, I could do that. If I add these two numbers, I will get my total liabilities, and that total liability is, I'm going to get my calculator. Next time I'm going to have my normal calculator instead of my phone. 390,000 plus your 225 gives me 615,000. But my total liability and shareholders equity is 1,650,000. If I minus that, my liability, it will give me 1035. So my total liability number 12 will be 1650. My shareholders equity is that what we just worked it out, 135000, and my in this case they told us made out of 990 was my current, and if I take both numbers and minus from each other, I will get the number for my number 3, which will be your 660,000. So this will be your 660,000. So take both numbers, minus it from each other, that will be the number. The part you needed to remember is your asset is equal to your liability plus your equity, and then once you figure that out, everything works out for you. Let's go to the next question. The next question is, first you needed to know what we are trying to do. We're preparing a statement of income. When you're doing a statement of income, we are only looking at your revenue and we're only looking for your expenses. We always start with the name of the company. In this case, the name of the company is Lydia Carvetti. And what are we trying to do? We are trying to prepare, and they told us to prepare statement of income. We needed to know which month we're doing it. They told us the month of May. So we are doing it for the month of May. It could be any year, so it will, in this case, if you're doing it this year, it will be 2025. If you were doing it last year, it will be 2024. So they told us Lydia spent, if you spent $160 on what? On a telephone. If that is the case, that will be my expense. And then we also paid for utilities and we paid for the rent. These are all my expenses. A statement of income have two. One, we have a revenues, the other one we have all the expenses. You could have a different type of expenses, so we have to go through it and see what are the expenses we come up with. First one, they told us it is your telephone expense, and the telephone expense that we spent the money first. The telephone expense is for, the question says it is for $160, and we have a utilities, which is also expense, and the cost of the utility to Lydia was $370. She also paid a rent, which is an expense, and that will be $1,500. So now the part, we already dealt with the first part. The second one is she took in $24,730 from selling flowers, so, and the plants. All sales were cash sales. So what she, that's her revenue. She is in a business of providing selling flowers and plants. So I will say her sales, the sales that she made was $24,730. So we dealt with number 2. She spent, so she spent, what else she spent? $10,733 cost of the flower. So that what we call it, cost of goods sold. So we have something called cost of goods sold. So that's what it cost us, cost of goods sold, and that is your $10,733. She also paid with gas and repair to the delivery. So what $329 she spent was for the gas and repair expense. Going further, she paid her employees $7,000 wages. So we have something called wages expense, and that is your $7,000. So if I add up all your expenses, they will be called total expenses. So total expenses will be, if I add all of them together, it will give me 20,092. I have a revenue and I have an expenses different between the both. My revenue is higher, then we call it net income. But if your expenses were higher, you will call net loss. So in this case, we only have a net income difference between the both number 4638. So that's what the number is. But if the expenses was higher, then you have a net loss. If the revenue is higher, then you have a net income. So let's see what the other part is. Are there any other cost that might have been incurred may but not listed? Think of it, what else could be there? So if I were to think about it, there's utilities, there's rent, there's a gas, there's wages. There was nothing. You're in the marketing program. If they hire you to do something, they did not put anything, something called advertising expense. That was not included in there. She might have that. The other thing could be a depreciation, because they said that we have a delivery vehicle. That the value of the vehicle is going to go down. You could also have a depreciation expense that was not included in these 3 comments that they told us. The other thing I can think of it, we could, if you have a car, you will also have an insurance expense on the car. That's the other one. The other thing could be we might not have the money. We might borrow money. You could also have an interest expense. So these are some of the other expenses Lydia might have that she did not have it for this month. Let's go further and see what the question is asking. We already did statement of income. Now we're going to do statement of financial position. And statement of financial position will be something called, it used to be called a balance sheet. So it will be called a balance sheet. So we wanted to know what of the accounts that goes in the balance sheet. So that's what we're looking for. So when you think of it, when you think of this, they're saying that it's just these are the balance sheets. So that's what we are looking for. So we wanted to know, identify each of the items in her record, if it's an asset, liability, or a shareholder's equity item. So we needed to see which item is a asset, which one is a liability, and which one is a shareholder's equity. If it's an inventory, it will be an asset. So it's wages owed to employees, we call it wages payable. If it's a payable, it will be a liability account. So this will be an asset, this will be a liability. Loan owed to bank, so we owe money to the bank, and that will be my liability. Then we say cash in your checking account, so that will be my asset. Cost of refrigerator used to store um, cost of refrigerator. To what they have it there in the flower shop, they need a refrigerator. The cost of this refrigerator will be is 18,695. That will be an asset, but it will be a non-current asset. We have something called prepaid rent, and prepaid rent is your asset. My next one is common shares. Common share is goes under the equity, under share capital. So the question is asking that where does it go? So in this case, it will be under shareholders equity. Then we have a retained earning, also go under my shareholders equity. So we answer part A. So this is the answer to part A. Now they want you to prepare a statement of financial position for her sent unlimited limited at the end of the May. So what they're doing is they're asking us to prepare it. So when you do that, the name of the company, Lydia was the owner, so the name of her company is Sent Unlimited Limited. And what are we doing? We're preparing a statement of financial position. When are we preparing is on the May, whatever the end of the, it's on the period end of, they told us end of May, and whatever the year is. So in this case, whatever the year, we start with my assets. Doesn't have to be in this order. We start with the assets, and my this side I will have my liabilities. Then I have shareholders equity. Remember, this one has to balance. We remember that asset equal to liability plus your shareholders equity. So this statement have to balance shareholders equity. So it has to balance. So first we're gonna look at it. We're gonna put all the assets together. So when you're putting all the assets together, so you're gonna do it in order. So they're saying that the first one, you could, it doesn't have to be in order, but we haven't learned that we have to put it in the liquidation order. The first item in the asset will be your cash account, and your cash account you have 8,361. So once I do that, I cross it. The reason why I'm crossing these, because you only use the account once. That's what the purpose is, using it once. You don't want it to forget anything, so we already taken care of that. Then we have something called inventory. My inventory was for 1100, so I put that one. The next one was, our asset was prepaid rent, so I will take that prepaid rent. And then we have, these are my current assets. So we have, these are my current assets, and then we have a non-current asset. So prepaid rent was 1500. My non-current assets, anything that is for a longer period, so more than a year. And what we have is, we have a refrigerator that the store bought, and that is for a longer period. That is for 18,695. If I add all these numbers, then it will be called a total asset. It's going back to the question that we did when we did fill in the blanks. If I add all these four numbers, I will get 29,656. So if I did this right, my answer to this side will also be that. So my total liabilities and shareholders equity should be your 29,656. That's the answer you should be getting. Now let's see if we get the answer. Under the liability, we have two type of liability. One is current, the other one is non-current. I go to my first one, is my wages payable. My wages, and it's a wages payable, and wages payable is 950. Then what we have is, we have a long-term liability, which is a loan payable to the bank. I will say loan payable, bank loan payable, and that amount, bank loan payable, is your $8,000. So then those are my liabilities. If those are my liability, I will call this amount total liabilities. So it's a total liabilities. If I add both numbers together, it will be 8,950. Now under the shareholders equity, what do we have? We have common shares. We also have, you can also have a preferred shares, and we have something called retained earnings. So those are the two things that are left. This is my 8,000. This is 2,706. If I add my 8,950, and if I add these two numbers, so this number, and this number, I should get 29,656, which we do get it. So again, your total asset equal to your 29,650 is equal to your liabilities and shareholders equity. So this is the question that we did when we did the filling the blanks. Now we're going to do part C. It says Lydia Cravat does not have an accounts receivable. The reason why she does not have accounts receivable, she's not selling anything on credit. That's why most of her business is a cash business, and it's a small business. If it's a small business, when she sells something, she gets a cash. She does not sell anything on credit, and most of her funds will be cash. That's why there's nothing under accounts receivable. Thank you so much for watching, and stay tuned to more videos. Don't forget to subscribe to my channel so you get notification that there's a new video available for you to watch. Thank you for watching. Take care, and bye for now.